Welcome to Markets Now. I'm Michelle Rook with Brian Grady of Pro Farmer. And over in the livestock futures, cattle mixed, hogs lower, but we were to the plus side in all the grains. Brian, let's start there. The rally continues to be led by the wheat market. Talk about the production concerns that we're seeing globally and how much higher do we have to go to price all that in?
Yeah, so Russia's the primary concern right now. They had the dryness in southern Russia, and that was the primary factor. That was until last week, and then they got the freeze event that moved into central Russia, and so now they got a couple factors that are coming into play, and it's always hard to assess wheat damage at this time of year, and so the market's kind of playing a guessing game in terms of how much damage done, how much production is lost, what's it mean longer term for Russian wheat exports, that type of thing. But what we do know is that the funds have reacted. And so this weather trigger in Russia has given the funds a reason to cover short positions, and not just cover, but actively cover short positions. So I don't think from a fundamental standpoint, we're to the point yet where the funds will want to flip to a net long position. But we'll have to see. And the whole fund CFTC data is so dated, it's hard to gauge from a day-to-day and week-to-week standpoint. And when you do get it, it's dated data anyway.
Yeah, the funds are short though yet in wheat, but all three of the markets. And so, if they do get out of some more of that short position, how much more of a rally could we see just on that?
Well, I think at some point in time, if we're going to continue this rally, the focus has to turn here to the United States, and there has to be somewhat of a summer weather rally. So June is typically the most common time frame for the corn and soybean markets, corn in particular, to post a strong rally. And so if we can get some concerns here in the United States from a weather perspective and start to push corn up on that, and corn takes over more of a leadership role, then it obviously would have more lasting power. When you look out to the 2024-25 marketing year, which USDA gave us the first look at last Friday, it does show higher carryovers across the board for corn, soybeans, and wheat. And so there isn't really a fundamental reason at the moment, unless we start lopping off some production here in the United States for them to flip to a net long position.
Yeah. Corn and soybeans then are essentially just following wheat at this point.
At the moment, they are. If we look back over the past couple of weeks, they've all taken turns on a singular day basis. But wheat is clearly the leader to the upside at the moment.
Yeah. The one production concern, though, that we have been following on soybeans is in southern Brazil, where they've had flooding. Do you expect that there's going to be much loss there as a result of that?
Oh, it's probably 2 to 5 million tons of total production that will be lost in Rio Grande do Sul and far southern Brazil because of the flooding. In the grand scheme of things, probably doesn't mean a whole lot because Brazil still had a big crop this year and will be an active exporter as we move forward here. So that it probably gave the funds and traders a reason to cover short positions more than anything. It is more of a talking point. We'll have to see, but like I said, probably somewhere in the 2 to 5 million ton range is where most of the estimates are right now. But it's so hard to gauge. The other thing it's done is taken out infrastructure and just slowed things down in getting soybeans to port. And so there is an impact there from a fundamental standpoint, but it's more encouraging the short covering at this point in time.
Yeah. And if there are losses, they're not going to show up in CONAB's report tomorrow. Too early for that, you think, or what?
I think it's too early. If I had to guess, probably CONAB will make a note of the flooding and say they'll assess it moving forward, but not have a good number on that. Just the timing came too close to the report.
Okay. Do you expect them to make cuts tomorrow in corn and soybean production in Brazil, though, otherwise?
Possibly. I think the question out of Brazil is USDA right? Is CONAB right? There's a big discrepancy there, and which one do you believe, and which one's the market going to trade, and those types of things. So I think that the market will pretty closely watch the CONAB numbers tomorrow. I'm just not sure it'll have a lasting impact on the trade.
You got to get USDA to come down or reconcile with them at some point to get the market to move then.
Yes, and so historically, what USDA does is after the production cycle is done, after the growing season is done, they go back and reconcile everything with the usage numbers that they get out of Brazil. CONAB hasn't done that on a year-to-year basis. What they've done is they've gone back over a period of time, and I think the last time they did it, it was like 7-year period where they went back and revised their production numbers. So you're still going to see a wide discrepancy between CONAB and USDA.
And Brian, you mentioned the funds covering shorts over in the wheat market, that they're doing it in corn and soybeans. Last week on the Commitment of Traders report, they exited 100,000 contracts each of corn and soybeans. That's like a record, isn't it?
Yeah, so very aggressive, I talked about some of the difficulties with the fund data, but sometimes you can see funds cover just a few positions, and you get a big price response, and other times they cover a lot of positions, and you don't get much of a price response, and so it's just really hard to gauge where they're at on a day-to-day basis from a positioning standpoint, and so I think at some point in time, the fund short covering will stop, and then they have to decide if they want to go net long. And unless we have some sort of a weather event here in the summer in the United States, I think that it'll be hard pressed to get the funds to want to go long across the grain and soy markets.
Okay, so we're going to need to feed the bull market yet here. It's not going to just be the technicals, because we're like above 100-day moving averages and some of the other key moving averages in a lot of these markets, aren't we?
Absolutely. The technicals have greatly improved, but we're all from a fundamental standpoint, we're into a weather market, and weather markets need to be fed on a pretty daily basis. And so to encourage that and get more weather support in here, we're going to need some fresh bullish news. From a technical perspective, that's doing as much right now as anything to get the funds to cover.
Yeah, and if we get an open window for planting, we could go the opposite direction, couldn't we?
Absolutely. So the planting pace just recently fell behind the 5-year average for the first time this spring, and so that on corn, and that was a somewhat of a concern. And it's soggy. A lot of these areas are extremely wet right now. But we have proven that the producer can go pretty quickly if we get open windows, and they don't need to be big open windows. So I think from a market perspective, the moisture that we're receiving right now, the soil moisture will be seen as a positive toward yield and not necessarily a negative.
Yeah, I'm hearing that from a lot of guys, that's for sure. Cattle market, I mentioned it was mixed. Live cattle futures setting back after a little bit of a better opening. That market, did we run up into resistance there from a chart perspective, or is there a lack of confidence in that market by the funds because we still have the futures at a big premium to where the cash is, or discount, I'm sorry.
Yeah, so that's somewhat of a head scratcher because I know there's some demand concerns and all of that from a supply perspective. It's still bullish, and so you typically wouldn't see your futures at this kind of a discount to the cash market. They're being very cautious at the moment. Let's put it that way. And so I think they need somewhat of a bullish catalyst to get that the attitudes to improve. But with that said, the downside is limited because of the discounts that they do hold to the cash market, unless there's some sort of external event that's negative. And at that point in time, obviously, it would put more pressure on the futures.
Do you think the bird flu news, have we absorbed most of that now?
I think we have, and I think that that's also contributing to that price structure where the cash is trading above the futures at the moment.
That makes sense. What about the hog market? We have the opposite structure there. The futures are at a premium to where the cash index is, and cash just is kind of stuck right now, isn't it?
Yeah, so the cash market's leveled off. Typically, you would see this about a month earlier in the seasonal rally. So early April, you would see a little bit of a pause, maybe even a little bit of a pullback in the cash market. We didn't have that this year, and we get to late April, we post the high, and then we backed off a little bit. But basically, it's a sideways market. But really, the futures, the head scratcher there is that they've been active in taking premium out of the futures, especially for the summer month contracts, and so it almost portrays a attitude that they don't think the cash market's going to perform up to what it normally would into the summer, and I just don't see that, to be honest with you. That's why it's somewhat of a head scratcher to me. I think they're way too pessimistic at the moment, unless there's some sort of event that happens. But the exports are strong for pork. Domestic demand has been strong for pork, and so there's no real story there for them to be actively taking premium out of the futures.
All right, thanks for joining us, Brian Grady with Pro Farmer, and that is Markets Now.